Good morning, everyone. Thank you for standing by and welcome to the MBDA virtual webinar on SBA Payroll Protection Program and Economic Injury Disaster Loans in 2021. My name is Gabriela Zambrano, and I'm the director of the Houston MBDA Business Center. During today's webinars, attendees will be in listen-only mode. There will be a Q&A session at the end of today's call. My colleague, Mark Craig, is going to monitor the Q&As. If you have any questions during the presentation, you may submit it online by entering it in the Q&A panel. As a reminder, this presentation is being recorded and the presentation will be available via email with the participants. Now, I'd like to introduce my colleagues, Mark Craig, Deidre Sutton, and our office manager, Jessica Vasquez. This is how the event will go. Mr. Jeffcoat will introduce himself and then make a presentation. Then we'll break into questions and answer, and we'll have a hard stop at 12:30 p.m. Our speaker today is Small Business Administration Houston District Director Tim Jeffcoat. Before we begin, I want to thank Tim and his team for working day and night since the pandemic started. Also, he's an incredible supporter for minority-owned businesses and a friend. Ladies and gentlemen, please welcome Tim Jeffcoat.
Good morning. Hello, everyone. Thank you, Gabriela, for that great introduction. You make me sound way better than I am. Well, I've got a lot to talk to you about, and I'm going to move pretty quickly. So as you have questions, just fire them in there, and we'll do our best to answer them. I'm going to talk to you about really just a summary of what happened in this Economic Relief Act recently. The 5 most important things, which we'll go over: PPP, Paycheck Protection Program loans, economic injury disaster loans and grants, grants for shuttered venues, and then 2 issues related to more traditional SBA loans on debt relief and SBA lending changes. We'll wrap up with a couple of recommendations. So if you wanted to hit this website that's shown on the screen, and don't do it now, you can do it later, we'll show you this information again. You can sign up for SBA's email list. Every time we help you, we will be emailing you and let you know about it. We do between 15 and 30 hours a week on a variety of topics that could help you. And so you know that I didn't make the It's all coming from official government documents. I know read all that stuff but that's okay. You can go find this same information on SBA's website that we use to develop these slides. We also included summaries directly from the Act itself, HR 133. Go ahead. The budget for helping small businesses as a result of this act is $284.45 billion, awfully precise number. But what you want to know is that $15 billion is set aside just for smaller community-based lenders that traditionally, such as minority deposit institutions, that traditionally work with more minority small businesses. There's also $35 billion set aside just for smaller first-time borrowers with 10 or fewer employees, or that are getting loans less than $250,000, and $25 billion set aside for those that used PPP before and are going for a second draw and are likewise quite small businesses. So that's good news that we're putting a particular emphasis on that. $20 billion has been allocated to restock the money for the EIDL grant program, which I'll tell you about. And then there's $15 billion. And you know, I find myself saying only $15 billion, and I can't believe that, for the Shuttered program. Go ahead, Gabriela. So let's talk about first draw PPP loans. I'll do a really quick review for you. Don't look at the screen, just listen to what I'm saying. These loans are meant to fund paychecks, the Paycheck Protection Program. The idea is that you are going to take your previous year's payroll, calculate your average monthly payroll amount, multiply that by 2.5, and that's the amount of your PPP loan. It's that easy. It's really straightforward. Now, the key with that loan is 60% or more is supposed to be used for paychecks. Now, remember, paychecks are only your W-2 employees, not 1099. Those are contractors. So 40% or less can be used for what we call additional eligible expenses. So what you see on this screen is that those additional eligible expenses categories has been broadened. It includes mortgage interest, rent, utilities, now includes some operations expenses for software, cloud computing, human resources, and accounting, includes the supplier costs. If there are supplies essential to your operation and you had a contract in at or before the time of taking out the loan, then you can pay those. It covers worker protective equipment like gloves and masks, but if you have enough funding, could even cover a drive-through window if that was necessary for your business. And then it also can cover property damage cost. If there's a public disturbance around your business, it is damaged and your insurance won't cover it, then the PPP money can help pay. Another important point is that when you get this PPP loan, you are choosing to spend that anywhere between 8 and 24 weeks. Make that determination, I think it's at the time you apply for the loan. That's what we call your covered period. And a really important thing for everybody to know is you have 10 months, 10 months from the end of your covered period to ask your banker for forgiveness. And there's a special process. It's really quite simple. And my office does 2 or 3 webinars a week to help you understand that forgiveness process. Next slide. This first box, and by the way, these things that say Section 8, Section 9, Section 10, this is referring to the specific sections of the Economic Relief Act that have this information. We've left off the 3. It's actually technically Section 3. But this is just telling you that your group insurance payments and those kinds of benefits, anything that is compensation goes into your payroll numbers. We are asking for voluntary demographic information. That way we'll know about the folks that get these PPP loans. We didn't do much of that the first time this was administered, so it was very difficult to explain who was receiving the loans. And you must have been in business February 15 of 2020. We hear from a lot of folks that opened their business in March, April, May, June, July. I'm sorry, you're not eligible. If it's before February 15, 2020. And then the importance of this Section 12 at the bottom of the screen is that if you had previously pursued a PPP loan and you were approved and you decided not to take it, or you decided to only take part of it, or you did take it and returned part of it, you may now go back to your banker and you may be able to get the original amount funded to you. Next slide. This is just telling us if there's been a new nonprofit added, 501c6 organization. So those are mainly chambers of commerce and what are called destination marketing organizations. Houston First, which attracts conventions and visitors to the Houston area. And publicly traded companies are specifically excluded from the PPP program. They may not apply for these loans. Next slide. Probably not relevant for anybody on this webinar today, but news organizations are now eligible. They weren't previously eligible. So if you are a broadcast license holder or newspaper, you may apply. Next slide. So I'm going to stop for a second. So first draw loan, do a quick recap. This is to fund your paychecks. It's up to $10 million. It's based on your average monthly prior to the loan 2020 or 2019. You're going to take that average monthly payroll times 2.5. That becomes doing these loans. You can go to our website in Houston And there is a listing of the local lenders that have participated in it and are most likely participating in it now. Forgiveness is based on 60% or more being used for paychecks, 40% or less on those other expenses we talked about. There's a third key for forgiveness. You need to maintain your head count and pay them 75% of what you were paying them in the reference period when you did your payroll. Those are the three keys for success. Now let's talk about second draw PPPs. It's basically the same thing as first draw, except second draw is restricted to a maximum of $2 million for the loan amount rather than $10 million for first draw. You can go to the next slide. There's one particular key to being able to apply for second draw. There's more eligibility, thing in particular that everybody fixates on. You've got to be able to show that you had a 25% or greater loss in revenues on a quarter-to-quarter basis between 2019 and 2020. So what does that mean? That means, let's say you use QuickBooks. If you use QuickBooks, QuickBooks can create quarterly financial statements for you. And if you compare any quarter to the corresponding quarter between 2019 and 2020, so let's say quarter 2 2019 to quarter 2 2020, that needs to show 25% or greater revenue. If it does, then you are eligible to apply for a second draw PPP. Now you also have to have fewer than 300 employees, and you have to have already used or process of using your first draw PPP loan. And you can't get any money dispersed to you until you've finished the first draw PPP. So you can see there on the screen that there are some limitations if you're involved in politics or lobbying, if you are affiliated with the People's Republic of China, if you're a registrant under the Foreign Agents Registration Act, or if you have a grant under the Shuttered Venues grant, which we'll talk about, then you cannot. Next page. So there are three ways you can document the 25% reduction in gross receipts, as we call it. I talked about the quarterly financial statements. If you don't have audited financials, and a lot of small businesses don't, then you just have to sign an initial each that it's correct. And if your gross receipts aren't specifically identified, then you have to annotate it accordingly. You may also, though, show this reduction in your monthly bank statements. You have to annotate, if it's not clear on those bank statements, which deposits constitute gross receipts. So, well, that's great. You can use your bank statements in order to constitute those quarterly differences. And then finally, if you were in operation all of 2019 and all of 2020, well, then you compare those tax returns. And if that shows a difference of 25% or greater, that's okay too. So you've got all three ways that you can show. You don't have to do it all. You can choose any of these three ways to show that you've had a greater than 25% reduction in gross receipts. Next slide. And let's skip that one. It's awfully busy and it isn't really relevant with the previous slide. So let's go to the next slide. There we go. So here's the really good news of second draw. Same as the first draw, it's 2.5 times your average monthly payroll, unless you are in a hotel or a restaurant. So you're in accommodations or food service. If you are that, or which is a NAICS code starting with 72, then you may request 3.5 times on your PPP second draw loan up to $2 million. If you are a multiple location business, no more than 300 employees per location, you can only get one second draw PPP, but it's the same 60-40 as we described with first draw, 60% or more, up to 100% on paychecks, 40% or less on those other expenses that we detailed previously. And people ask, Tim, who do I go to for my second draw PPP? I think the answer is easy. Why don't you go to the person you got your first draw PPP from? They've already got records on you. It should be easier. Now, sometimes you didn't like them. For reason you didn't like your experience getting your first draw PPP, you want to use a different lender. Okay, no problem. You go to our website, you can download that list of the lenders in the area that are doing PPP loans. And what I would recommend is whatever bank there grabs your attention, go to their website, make sure they're doing PPP loans. A few are not. And then you can start the process with them. But in most cases, 99 times out of 100, just go back to your first PPP lender and you should be in good shape. Next slide. Let's see. I think the important things here, starting at the bottom of the page, what that one says is that all of the same safe harbor and exceptions from the first draw PPP count for second draw PPP. What it means is none of the forgiveness stuff has changed. All of the things that were created and established for the first draw PPP for forgiveness apply exactly to second draw. And then the highlighted in yellow at the top, there are a number of things that SBA has done in order to prioritize underserved communities reaching these loans. And you know what? This is a great time. I'm going to stop for a second, look over here on this computer. I just got a little news blast to let everybody know 65% of the loans done in the last 2 weeks when PPP has restarted have been to $50,000 or less, which is indicating we're reaching those very small businesses that we're trying to reach. So that's really good news. And that's out of 401,000 loans that have been done in the last 2 weeks. So it's working. Next slide, please. So let me stop for a second and do a fast recap. I told you all about first draw, up to $10 million, 60% checks, 60% or more on paychecks, 40% less for the other expenses. You can use it between 8 and 24 weeks. After you use it, you can take up to 10 months to finish your application for forgiveness with your banker. You may earn up to 100% forgiveness. If you spent it the right way, then you should be able to do that. If you got a loan under $150,000, there's a really simplified process for requesting forgiveness, with the goal being to get you 100% forgiveness. The second draw PPP is essentially the same. It's limited to $2 million. You must show 25% or greater revenue compared quarter to quarter or with tax statement tax returns year to year. More than 300 employees, you cannot be publicly traded. And I think those are the high points. Now let's talk just a little bit more about forgiveness. Next slide, please. This most recent Economic Relief Act instructed the SBA to create a streamlined forgiveness process for borrowers of $150,000 or less. And that has been accomplished, and that is on our website, right? You can go to our website, sba.gov, and you can download this most recent application that is for loans up to $150,000. You basically say, this is Tim's business. Here's my EIN number. I borrowed $120,000 and please forgive me. And then there's a bunch of little bit simplifying. And then there are several spaces where you certify that you promise you really did spend everything properly, 60% or more on pay, 30% or less on the others, et cetera, et cetera, et cetera. You sign at the bottom, you submit it to your lender. It's that straightforward. Now, we do ask you to keep your records on how this was spent for 4 years, because there is a chance that we're going to come back and take a look at it and make sure you did what you said you did, but we might not. Also, there was a provision in the CARES Act that said when you PP, we will deduct your EID grant. Excuse me. Well, that has been repealed. So if you've got an EIDL grant and have not applied for forgiveness, don't worry about it. It's not an issue anymore. You got applied for PPP forgiveness, had an EIDL grant, and it's been deducted from your forgiveness. That's going to, your lender will contact the SBA, and SBA will basically refund that amount to the lender that they can then apply to your account so that you are, as the words say here, made whole. So that's all really good news. Next slide. Now we're going to talk about those grants. Go ahead to the next slide. The EIDL grant, or, I hate that we call it a loan grant. That's kind of confusing, but it's an EIDL grant. And the CARES Act asked the SBA to give $10,000 to every small business that asked for it and was eligible to receive it. Well, we did two things. First, we ran out of money at a certain point in time, and a lot of people had applied and were not able to get that grant. Secondly, we changed this to say you don't get a $1 grant, you get a grant of $1,000 per employee, maximum of $10,000. So here's what's happening now. All those folks that got the grant but didn't get the $10,000 and are in a low-income area, you will be contacted by the SBA back and get the remaining amount. If you applied and you are in a low-income area and you were never funded at all because the program ran out of funding, you will now be contacted by the SBA to come back and get your grant. So that's great news. And the EIDL loan actually ended December 31st of 2020. And this act restarted it in 2021 so that it will run through the rest of this year. Next slide. You should be thinking this: what is a low-income community? And gee, that title should have a question mark on it. It doesn't. We'll fix that. There are two definitions, and this is from the Internal Revenue Service. A poverty rate that is at least 20% in census tract, or the income level in that census tract does not exceed 80% of the statewide or metro-wide, if it's in a metro area, family income. So that's the definition for a low-income community. You might still be scratching your head and say, Tim, I'm not sure if I'm in a low-income community or not. Well, in the coming days, and I believe this will probably be maybe in the next week, I am told that there will be a public-facing website available so that you can confirm if you are in that low-income community. One thing for you to know, two important things. First, you can't apply for this if you didn't already. There is no provision for new applicants for this grant. Secondly, if you already applied for it and didn't receive it, or were only partially funded, and you're in this low-income area, then SBA will be contacting you. There's nothing you have to do. So those are the important points to know here. Now I'll go a step. If we go okay, it's all right if new applicants apply for the grant, but I think that's probably unlikely. I think there was only $20 billion put into this, and the last there were 12 million applications for this grant. Next slide. Shuttered venue grants. I'll do this quickly because I suspect this doesn't really apply to anybody in this webinar, but we'll do it quickly. So go ahead. It's only one page. Go ahead to the next slide. If you are a live performance venue of some, like a place that regularly holds concerts, or you are a ballet or a dramatic production, or etc., then you fall into this shuttered venue category. You may apply for a grant up to $10 million. You spend all that and need more, you may be able to get a second grant for 50% of the up to 50%. And it is for only those that can demonstrate greater than 25% revenue loss with an emphasis on those that are 70% or greater revenue loss. This program has not started yet. It will probably start in the next week or two. And I anticipate it'll run out of funding quite quickly because here in the Houston, thousands of businesses. So if you want to know more about this, or you know somebody that you think is one of these venues and would want to pursue this grant, currently we're doing twice a week a Shuttered venue preparedness webinar. So since it isn't active yet, you can't apply for the grant. But there are two important things you have to do. You have to get your financials in order to be able to demonstrate your revenue losses. And the second thing you have to do is create a profile at a government website called SAM, System for Award Management, before you can receive the money. So those are pacing items. Basically what we're doing is encouraging folks to get that sorted out as fast as they can, so that when the grant process comes online, you can jump on it right away. Next slide. So I talked about things in the Economic Relief Act that will affect those that are facing disrupted business or reduced business because of disaster. There are plenty of businesses that are actually doing pretty well right now. You're either within 90%, let's say, of where you used to be, or you may actually have a really significantly increased amount of business right now. It's true, there are a lot of businesses that are like that. Well, for you, we've got great news. Go ahead to the next slide. The first is that if you currently have SBA loans, that would be a 7A or micro loan, then we will continue to make your loan payments on your loans up to $9,000 per month cap for the next 3 months, February, March, and April. Now that's if your loan was in good status to begin with. If you were behind or had other problems, then it's probably not going to be for you. And if you are one of those businesses in hard hit sectors, like not exclusive of, but example, food service, accommodations, arts, entertainments, recreation, education, laundry, and personal care, you may get 5 extra months of payments up to $9,000 per month paid on your existing SBA loans. So that's really good news for those that have existing SBA business loans. These are not disaster loans, these are the SBA business. In addition, this is the other really good news. If you think this is the time that, because your business is doing okay, that you want to borrow some money for some new equipment, or to fund you for branching out into new markets, or maybe you want to buy the building that you're in, or purchase some land, or something like that, that would be really important to the future of your business. This is a great time. If you go pursue that loan and get approved, then we're going to pay your first 6 months payments on that new loan for you, up to $9,000 a month. Now that expires September 30th of this fiscal year. So that would mean if you're interested in this, get going right away. Because if you can get your loan, what is that? That works out to, if you get it executed in in February, then we'll be able to pay March, April, May, June, July, September. I skipped August. All right, so you through March to get that done. Calendar is not my strong suit, but you do want to go ahead and get on that, because that's a wonderful benefit. But there's more. Let's go to the next slide. Go ahead. So right there in the middle of the page in red, it says lender and borrower fees are waived for the 7A and 504 loan program. Not only are we going to pay your first 6 months payments, but if you pursue one of these loans now, because your business is basically in good shape, then there will be no fees affiliated with the loan. And there are always fees, because those fees help make this loan program perpetuate. So the SBA, in essence, will be paying that fee for you. And some more good news, we are incentivizing these SBA lenders to work with you. How are we doing it? Well, we essentially co-sign on these loans with you. Let's say you needed $1 million for new equipment. Ordinarily, SBA will be on the hook for 75% of that if you were not able to pay that loan, if something happened to your business. Well, we've raised that guarantee to 90%. So in this case that I just gave, we would be responsible for $900,000 of your $1 million loan if the worst thing in the world happened and you could not pay it back. So the bank's exposure is only $100,000 or 10%. So that gives them great incentive to finance you versus some other business where they don't get a guarantee at all. We're giving them a 90% guarantee. And then finally, we are doing or extending a program called 504 Refinance. What that means to you is if you have existing debt for your business and, as I said earlier, you're basically in good shape, this is an opportunity to refinance that debt and package it into what we call a 504 loan. The 504 is noteworthy because we'll give 40% of that loan value will be a fixed interest rate for up to 25 years. And right now, those fixed rates are at a historic low. So that could be a really good opportunity to change the profile of your business so that you can move forward with a much lower debt servicing requirement every month, which in turn will should just increase your bottom line. Next slide. And then, so here's our recommendation. There's a lot of stuff on this slide, but if you just look across the top, 3 of those organizations, the Texas Gulf Coast Small Business Development Centers, Houston SCORE, and the WBEA Women's Center, those are direct partners of the SBA. So we help fund those organizations so they can exist. Consequently, their services to you are free. So they can advise with you at no charge, and they're really good at helping you understand how to do PPP, Eidl, and the rest. Now, obviously, you're working right now in an organization. Greater Houston Women's Chamber of Commerce Women's Business Center. We have 2 women's business centers, but they are brand new. They're not yet ready to help you with these kinds of things. Just reminding you on the middle left there where my website is, and on the middle right, that's the phone number for my office and our email address and our Twitter handle if you'd like to follow us. And I think that takes us to the end of this presentation, Gabriella, if we want to take some questions.
Oh, Tim, you're ready, and or hopefully Mark is ready to field the questions. Are you ready, Mark?
There we go. Okay. On our first PPP loan, for whatever reason, the TIN or EIN for our company was wrong, and we noticed it at the end, and we tried to apply for a loan forgiveness program. How can we fix that?
Yeah, great question. Thank you for that. All you want to do is contact the lender that you got your loan from. So let's say it was the Bank of Tim. So contact your banker at the Bank of Tim and tell them that this occurred, and they have a mechanism to alter that. They may have to involve my office, and my office may have to involve what's called a processing center within the SBA, but that can get changed, and they should know how to take care of it. Let me go a little bit more in detail. In the Houston area, we generally have 150, 200 or so banks and other lenders that work directly with the SBA, and they know all of our stuff very well, and this kind of thing, no big deal. It's in their sleep. During PPP, guess how many lenders we have? We have 1,000 lenders. So that means about 800 of those don't really know this stuff all that well. They're good at making the loan to you, but they might not understand how to fix it. So when you contact them, they may be dazed and confused. That's okay. They should know who to call in my office, and we will be able to help them get that fixed.
Okay, well, a lot of questions regarding a recording of today's webinar. Yes, everyone who registered will be getting a copy of the link, which is actually on the Houston MBDA YouTube channel. So the next question is, had 0 W-2 payroll in 2019 and had some W-2 payroll to employees in 2020. Am I eligible for PPP?
It sounds like you are eligible for PPP. If it's a first draw, you're only going to be eligible based on what happened in 2019. May be able to include January, be able to include half of February. But basically, if you didn't have W-2 payroll in 2019, I'm going to assume you're a sole proprietor that got to a point where you have employees. If so, congratulations. But to be doing your PPP loan on the basis of what the IRS says is your income, and your income is the net profit for your business. So if you are a sole proprietor, it's going to be line 31 on your 1040 form. You're going to take that number, divide it by 12, multiply it by 2.5, and that's your loan.
We
But
stopped
also,
running. Oh, pardon me.
That's okay. Just a follow on. You might not be a sole proprietor. A very good thing for you to do is to just contact the banker you currently work with, tell them you're interested in a PPP. In a very short order, they will be able to nail that down for you because this is what they're good at.
We stopped running payroll in May 2020 due to lack of funds. So we don't have any payroll documentation for all the rest of the months of 2020. We started running payroll again this month. Can we still apply for PPP loan as we didn't get last year?
Yes, you can. Essentially, what you're going to do is you're going to base your average monthly payroll on the months that you are operating. So in a nutshell, if you were operating for 5 months, you would take the payroll for 5 months, divide it by 5 to get the average, and that's what you'll work with. There are probably a few nuances to that. I'll give you the same advice. If this is a first draw PPP, well, if it's a second draw PPP, that's easy. Go to who you worked with the first time, and they'll be able to resolve it for you. If it's a first draw PPP, you'll have to talk to my recommendation to whoever you currently bank with. If they are doing PPP, then they will be able to help you through this. They'll understand what to do. If you can't find a PPP lender, and that's possible, then go to my website. You can download that list, and there's roughly 300 on there that you can choose from. And odds are it's one right down the street from you.
If a self-employed individual with no employees did not show a profit on Schedule C, but had disbursements, do they qualify for the PPP loan?
Not. And technically, you are eligible, but the value of your loan will be $0 because you didn't show a profit. And I know a lot of sole proprietors say, yeah, but I was paying myself a draw. I know. I've been there before myself. I'm a sole proprietor. But IRS defines your pay as your net profit, and that's the basis of the PPP loan. So in your case, you'd probably want to look at the economic injury disaster loan. That's up to $150,000. It's based on how injured you have been by the. It's a 25-year loan direct from the federal government at 3.75% interest. There is no forgiveness for it. It is a loan, but it's very versatile money. You can use it in lots of different ways to help your business get through this.
Is there a headcount requirement for second draw PPP loans like there was in first draw?
Well, there's a limit. You can have no more than 300 employees. If you're a multi-location business, 300 employees per location. So that's the only limitation that I'm aware of. You could have 0 employees and still file. So from 0 to 300, just keeping in mind, if you're, like I said, if you're a sole proprietor with 0 employees, then you're going to get, it's all going to be based on your net profit.
Can we show the reduction by bank statement only if we do not have QuickBooks? How do independent contractors document this? Lenders are requiring to show this on all 4 quarters.
Yeah, you can. Contractor, you're getting paid on 1099s. Use your bank statements, and what you would do is you would annotate on your bank statement for each month, and most of us can just go to our online account and grab those statements, and you would show what is income, which of those 1099s payments that you receive were income, and that could constitute the income for your lender. So that should be okay. It sounds like you mentioned you've already talking to your lender. That's good. I absolutely recommend you do that because they're going to be able to help you through that process as well.
All quarter revenues in 2019 are zero. However, there was a drop in revenue from quarter two to quarter one of 2020 due to COVID-19. Are we still eligible for a second draw of PPP?
Well, the eligibility for second draw would mean you already had a first draw. So did they indicate whether they had a first draw?
No, I'm kind of getting the feeling that I think that you're onto something, that they need to do a first draw before moving on to the second draw.
Well, and if we assume they did a first draw and you did have a drop between quarter one 2020 and quarter two 2020, well, no, you're not going to be eligible because you've got to show the difference between 2019 and 2020. So it sounds like to me that you would not be eligible because you have to show that your revenue quarter one 2019 were $1 million, and now in quarter one 2020, $500,000. Well, that would be a 50% reduction, therefore eligible. But if you had no revenue in 2020 and you did have, in 2019, and you did have revenue in 2020, then by definition, you have increased your revenues and you won't be able to show that reduction. For you, you might want to look at the economic injury disaster loan. It might be.
Do you need to show a reduction in gross receipts if this is your first PPP draw?
No, there is no required first draw PPP. You really only, identifying yourself in all the ways you normally have to identify yourself, like on a tax return, the only thing you really have to do is calculate your average monthly payroll, multiply, your total divided by 12 times 2.5. That's it.
For the second PPP for professional architects or engineers, we have contracts continue for 2 to 3 years, even though the financial reports might not show reductions in income, but contract awards definitely reduce the impact we'll show in 2021 and 2022.
Yeah, so I guess they're asking, how do they show the reduction 25% or more?
Because, so what I'm gathering is that it's their contracts are reduced. Yeah.
I don't think that there is any provision for that in law right now that I have seen. There could be. We're writing new rules on this all the time. In fact, while we're talking, an email came out on that. So something could have changed, but to my understanding, it's pretty cut and dried. You've got to show that 2020 revenues, in one of the ways I've described earlier, is 25% decreased or more from 2019. Now, if you have a contract value that's, say, a 5-year contract and the value of it was decreased, but the income you get from it in 2020 was not decreased, or it wasn't decreased more than 25%, I don't think there's any provision for showing that. I think the federal government's view is 2022 or 2023.
For second draw, 2.5 times the average monthly payroll cost is the 1 year prior to the loan. Does that mean that in the 12 months before we apply, which is 2020? I don't quite understand that question.
Yeah, try that one more time. I bet I can figure it out.
For second draw, 2.5 times the average monthly payroll cost in the 1 year prior to the loan. Does that mean in the 12 months before we apply, which is 2020?
The way that it reads on the important thing for you to do is download the draw application off of the SBA website. And in the instructions there, I'm real sure of this because I think I looked at it this morning or late yesterday. It says you may use 2019 or 2020. So take a look at that. So the application is very brief. And in the instructions, I think it's line 2. I don't have one in front of me right now. It tells you what period to use. And I believe that it gives you your choice.
Hi, I'm a self-employed Uber driver. Do I apply for PPP loan or EIDL loan? I was approved for EIDL upon a credit check was declined. Can I reapply for second EIDL via SBA or bank? Thanks.
Okay. So first, PPP for you, you would have to be earning a net profit based on line 31 of your 1040 tax return. If you look at your 1040 tax return and you've got a net, IRS says that's your income, divide that by 12, multiply it by 2.5, and that would be the amount of your loan. I talked to somebody just this morning that said, yeah, but it's only $20,000. Okay, but $20,000 divided by 12 times 2.5 is $4,200. And it's 100% forgivable. So it might actually make a big difference for you. If you're not earning a profit, then you can't get the PPP. If you're turned down due to credit, you can apply for reconsideration. You can't apply a second time, it'll just get rejected. So you can ask for them to reconsider it, but if they turned you down on credit terms, unless you have improved that credit or something has really material has changed based on credit, then you'll probably be disapproved again. But you may go back to the Office of Disaster Assistance and ask for reconsideration. But if they're going to use the same information, the answer will be the same. So you're going to have to be providing them new information. Their original decision was not correct.
Can a business started in January 2020 apply?
Yes.
For second draw, if the only W-2 employees in the business are also owners, can we still apply?
Say that one again.
So the only W-2 employees are the owners. Can they apply?
Yeah, absolutely. Absolutely. We
Okay.
want you to. We would like you to do that. It's important that you get paid.
Which lender has submitted highest number of loan applications to SBA? I have experienced extremely long delays without a response from my lender.
Okay. Well, off the top of my head, I don't know this exactly. And so we have 3 groups of lenders, let's say. There are those national lenders that have local offices and do a lot of SBA lending. Then we have the local community banks, and then we have credit unions. Then we actually have fund banks that do lending. So there's actually 4 categories. In that big national banks, I think the largest was JP Morgan Chase, Wells Fargo, and BBVA Compass, Bank of America, maybe Comerica. They did quite a few loans. I think Compass, or maybe JP Morgan Chase, they did like 11,000 or 12,000 of them here in Houston. Huge number. Now, of those community banks that are here, at the top of the list in terms of the numbers of PPPs they did, Amagi Bank did, I think, 7,000 or 8,000. Allegiance Bank did about 6,000. Third Coast Bank did 3,000 or 4,000. Wallace Bank did, I think, 4,000 or 5,000. And I'm probably forgetting a really important one, but those were some right at the very top of the list were those banks. So I hope that answers your question.
Is there a second draw for EIDL grant this time around?
No, EIDL is one time. If you have an EIDL and you would like more money, you need more money, then you can ask for an increase in the amount of your loan. The maximum EIDL for COVID is $150,000. So to use it, if you applied and you got 50,000 and you're now saying, wow, you know, this is going on longer than I thought, and I'm going to need another 50,000 to get through it. You may apply to have your loan value increased. Couple of things you need to know. First, the loan amount is based on how injured you have been, and that's quantifiable. They are going to want to know what were your previous revenues and costs, what are your current revenues and costs, and how economically are you. That amount. And then the second thing, what was this? Oh, the second thing you want to know is that it's a mainly manual process, and there are probably a couple of million people in line at the moment. So I'm pretty sure it'll take longer than a week, but I can't even begin to guess whether longer than a week means it'll take a month or 6 months. But it won't probably be very fast.
On the second round PPP, since my business was formed on January 1st, 2020, do I qualify if I only show quarter-to-quarter loss within the year 2020?
Yes, yes, because you were just in 1 year. I probably need to go look it up and look in detail. You know what, Gabriella, I told you to skip one particular slide that had a whole bunch of yellow all over it. That slide has those details. I don't know. I just decided it was just way too much, making you guys read tiny print too much. But it's probably right in the middle of that slide deck somewhere on draw PPP. But I'm pretty sure that what it says is if you were only in business that time, there you go. That's it. Yeah, I think it's that last one. Yeah, if the entity item DD was not in business during 2019, but was in operation February 15, 2020, had gross receipts during the third or fourth quarter that demonstrate not less than 25% compared to the first 2020. So there you go. I think that is the exact answer that you were looking for. You may do that.
For EIDL grant, what can we use the grant for? What expenses are eligible? Can I use it to pay for business loan?
The EIDL grant, as opposed to the loan, the EIDL grant, when you get it, it tells you what you may use it for, but essentially it's for pretty much any need that your business has got in order to keep your business whole. The EIDL loan, those are intended to be for operating expenses to keep business running. That's the simplest way to describe it. It is not anything new, and in fact, you're prohibited from doing that. I even had a situation lately where somebody broke their cell phone and they wanted to buy a new one with their EIDL loan proceeds. That's unless the Office of Disaster Assistance approves that, that's not an appropriate use of the funds. The funds are for paying rent, utilities, operating expenses, that kind of.
So no trip to the south of France, I suppose.
No. There's a man and a woman in both Texas that were running an online school on how to defraud the EIDL loan program. They charged admission for it. They themselves got several hundred EIDL loans, and they are now in jail because they were not only getting loans they weren't entitled to, but they were spending it on things like Ferraris. I have a picture of the two of them together toasting each other with champagne over how well they have stolen taxpayer dollars. And I do hope they throw away the key when they lock them up.
So we got an EIDL loan during the last disbursements, but we didn't get the grant. So what do we do now?
Nothing you can do. There's nothing you can do. The grant will only be dispersed now to those that already applied for the grant and are in a low-income area. So if you are not in a low-income area, then you don't have any chance of getting it. If you are in a low-income area, and when you applied for your loan, you also clicked the button that said you want the grant, then you will be contacted by the SBA. And to follow on, I understand that contact is going to begin in the next couple of weeks. So I would say in February, folks will be contacted that had already applied for this.
Are the EIDL loan payments from the borrower deferred to January 2022? Like in our case, that the initial loan installment was scheduled for May 2021.
I don't think so. I don't know the answer to that. I'm sorry. Generally, when you get an EIDL loan, payments are deferred for the first year. What you would have to do is when you got your loan, it came with a loan note, and in that loan note is going to have that in. So if you're saying it was deferred, it was deferred for 1 year from May 2020 to May 2021. I am not aware that it has been deferred any longer than that. Not that I'm aware of.
Do people apply for EIDL at SBA.gov?
Yes.
Okay.
Sure do.
Can you please explain again the last slide of the second draw?
That one. Yeah. Any one of these methods that work for you. At least that's what it says. The easiest is if you financial, then be able to show that quarter 1 19 to quarter 1 20, or quarter 2 19 to quarter 2 20, quarter 3 to quarter 3, quarter 4 to quarter 4. That any one of those quarters you had 25% or greater reduction in gross receipts. Is not something you can do, then you can look at monthly bank statements. And just, the example we gave earlier, someone gets multiple 10 payments from the people they contract with, then just show on your monthly records the income that you are getting as a 1099. And then finally, if you were in business all of 2019 and all of 2020, then you can simply compare the revenue lines from your 2 tax returns. So as it says here, okay, it doesn't tell you the line, but whatever is relevant for your type of business. So if you're a sole proprietor, it's gonna be line 31 to line 31. So you can compare those tax return statements in order to document the 25%. Any one of those. It does not have to be all of them, any one of those.
Regarding the simplified forgiveness process for first draw PPP less than 150K, is the statement required in addition to a forgiveness application or just the statement?
It's both. They're one and the same. It's a one-pager. The top half, you say, I'm Tim's business. This is my EIN, phone number, address, etc. My loan was for this amount of money. Please forgive me. And then the bottom half of it are the, well, as we call it, the attestations, where you attest to spending the money correctly and all those kinds of things. So yeah, all that is on one page, and you can go download that at sba.gov.
Typically, how long does it take to get the second PPP approved?
It's slower than the first one in most cases, and there's good reasons for that. But essentially, just because you got a first round doesn't mean, even if you have a 25% or greater reduction in revenue, that you will immediately get your second round or your second try, because there could have been wrong the first time. And we funded you, or rather the bank funded you, everything's fine, you're going along, but we might have found something in the interim. And so there may be as we call it, a flag on your account. And we just need that information fixed before that can proceed. So with the first round, from the time the loan was approved, the banker must fund you within 10 days. That is still the case with the second round. However, the approval process is probably, instead of taking virtually instantly with the first time, it's probably going to take 2 or 3 days. So it could be, let's just round it off and say it'll probably take about a week than with the first round.
How do we apply for the non-disaster SBA loans?
If you go to my website, which is on the left-hand side of that screen right there, right in the middle, there is a listing there, and it says it's of all the PPP lenders in the local to Houston. That actually is a list of all of the non-disaster loan people, the ones that do 7As and 504s. So you can go right to that website, you can grab that list, and everybody on that list should be a good contact for you to do those kinds of loans. Another thing to do is if your banking was today, you might just go hit their website and see if they do SBA loans. If they do, it may even be simpler for you because you already have a banking relationship there. But let me give you a quick word of caution. Whoever you currently work with there may not even know they do SBA lending. And it's very likely they don't understand the SBA programs. So internal to each bank, especially the larger lenders, is a group of people that all they do is SBA lending. So ordinarily, what they would do is they would direct you to this other group, or they would liaison your contact with them in order to do SBA financing. So just don't be surprised if you talk to Joe or Sarah that you've always talked to the bank and they don't have any idea what you're talking about. On their website, they do SBA lending.
Gabriella, we're at 12:30.
I really want to respect Tim's time. So I know we have like thousands of more questions, but Tim, I really want to thank you and Mark for moderating the Q&A. I know this is something that is always happening, but I want to encourage people, one, to sign up to the SBA email list. I think one of the things that Tim does, he does several workshops. Well, not Tim, but Tim and his team, several workshops on SBA, PPP, and Eidl. The website has a lot of resources. I mean, you can actually go to the SBA.gov and look for actually the list of PPP lenders, and I think they're updated whenever he gets new information and so forth. You have the Houston contact, the email. I mean, I don't know what else to do. And of course, if you're a client of the MBDA, you can always send us an email at mbda@hccs.edu. But that's it. Thank you so much. Tim, would you like to say any other words?
Yeah, just last comment. I agree with everything that you were just told. And we do twice a week right now. We do special little 30-minute webinars where it's either me or the Deputy Director, Mark Winchester. Ask us anything that's on your mind, and if we can help you, we will. Sometimes we have to take your questions and send them to somebody. But that's another thing that you can do if you still have questions that you want answers to. You can always drop into one of those webinars. We limit them to 30 people. So the first 30 that show up, we close after that, and we try to deal with everything that they have. Other than that, I want everybody to do well, and I hope that these programs, and we're really counting on your success.
All right. Well, thank you, everyone. Have a good day and enjoy your day. Bye-bye.